It's November 23rd. JLD here, and welcome to MSTR today in the Treasury Titans. Nothing in this video is financial advice, but it is Sunday, so I just want to give you the chance to kick back, listen to Phong Lee, the CEO of Strategy, just drop value about what his company is, what they do, what they're doing, what their plans are in the future. I love this interview. I actually listened to it twice, once in regular speed, once in 2x speed on a walk. And I got nuggets from both of those listens. Highly recommend sitting back and enjoying your Sunday with this, because if you're nervous about MSTR, in my opinion, it's because you don't understand the company. You don't understand what the future holds for them. If you believe in Bitcoin, to me, there's no way you can't be unbelievably bullish about what Strategy is doing now and going into the future. So sit back, relax, check out the Milk Road show. And thank you, John, for interviewing Phong Lee to this high level. And take it away.
You just give us sort of a quick overview of what is a Bitcoin-backed security and what differentiates some of these products from one another.
Yeah, it's interesting. We happened upon some of these securities as we were trying to solve problems with our capital structure and ultimately problems with the capital markets. We started with MSTR, which is amplified Bitcoin. So if Bitcoin is returning 50% a year with 50% vol, MSTR might return 80% a year with 80% vol. And so we amplified Bitcoin. And that's great for people who want to invest in common equities and want to see greater upside, greater risk, greater return. But we realize not everybody wants that, right? And we accessed the debt markets in 2022, in 2020, right after we launched our Bitcoin Treasury strategy. And we primarily did that through convertible bonds. And those convertible bonds cause MSTR to be amplified because we're able to lever up the company. But when you access convertible bonds, you start to realize it's a 144A regulated market, which means that only qualified investors can invest in these. Retail cannot. You realize it's not the most liquid market. There aren't a lot of people, like maybe 50 people around the world, who invest in the convertible bond market. And you start to realize that the pricing as a result is not as advantageous to us. And although they're fairly long duration, 4, 5, 6, 7 years out, they're not perpetual like our preferreds are. And we raised right around $10, $11 billion through convertible bonds. And that was great to purchase Bitcoin and start to scale our company and lever up the company. But we realized as we entered 2025 that we started to tap out that market. In 2024, we were the largest issuer of convertible bonds in the world. I think we were something around 35% of the entire convertible bond market. And so we said, what are our alternatives to that to raise capital? And we stumbled upon this idea of preferreds. And so there was a company reason to want to do preferreds because they're perpetual in nature. They can be retail accessible. We can put an ATM on top of them. But there was also a market reason for these preferreds. As we looked at the market for preferreds, we realized they weren't liquid. The investors and the people offering these were not the most attractive in terms of the companies offering them, and the investors weren't getting a lot out. And we said, hey, we can disrupt this market. The preferred hybrid security is something that is easily accessible. You can put a 4-letter ticker on top of it. And if it's generating 500, 600, 700 basis points because of Bitcoin, we can offer somebody 10.5%. And so what did we do? We said, okay, there's a need for the company to offer a perpetual security. And there's a need for the market to be able to invest in Bitcoin, get lower volatility, lower returns, and to get paid a dividend of that's much greater than what you can get in the market, 400 to 600 basis points greater. It's not often in your career do you find a product that the company needs, right, and a market that wants the product, right? And as we started to evolve this over the course of the year, we realized there's real product market fit here, right? When we launched Strike in January, which is our convertible perpetual preferred, and we did that because we thought that was an easy transition off of our convertible bonds. People sort of understand it. They get some equity upside. They get a dividend of 8%. We were fighting upstream. We were swimming upstream, right? The banks didn't quite understand it. The attorneys didn't quite understand it. The market didn't quite understand it. And when we did our first IPO, it was still sizable, right? I think it was about $500 million or so. But we were just starting getting started, right? Retail didn't quite understand it. And that was, I'll call it our gateway preferred, right? A gateway from our convertible, a gateway from our equity, but something that the market started to get comfortable with. And we put an ATM on top of it. And we started to see the performance of the preferred, just in terms of price, outstrip every other preferred. And we saw the liquidity of the preferred, about $10 to $15 million a day, outstrip the typical liquidity of a preferred, which is about $1 million a day. And so we knew we were onto something, right? And so that was the gateway, a convertible, right, perpetual preferred. And then from there, we said, okay, there are other products that folks might want. They might want just a straight preferred that's not convertible. And that's what Strife was. Senior in the capital structure. It looks more like investment grade preferreds. And we put that out there and we said, we're going to, pay 10% dividends on top of that, right? So consider that as an investment grade hybrid or an investment grade preferred. Right? So that was the second thing. And we said, okay, now we've got two products. We're going to slot in another one, which is now a junior, sort of a junk bond rated preferred, which is at the bottom of our capital structure. No governance rights. It's not cumulative, but we're going to pay a higher dividend yield on that, right? 10% at par. Right now, as it trades in around the 80 range, is like 13%, right? And so, and that's for a different class of investors. Some want investment grade, some want junk bond, junk rated. That's okay, right? And I'm saying those as comparison points. And then the last one that we did, or not the last one, the second last one was Stretch. In Stretch, we said, let's change the entire game. Right? If you're not just bond fixed income investor, where do you put your money? Right? And as an average individual, you either put your money in a checking account and you get paid nothing, right? For the most part, or you might put it in a savings account and get paid 45 basis point. Or if you're lucky enough to have enough capital, you might be able to put it in a money market and get paid 350 basis points. Well, what do people park money in a money market for? It's really overnight money. Of course, you want the principal to be stable. I don't want to put $50,000 into a money market, see it go up 20% and down 20%, and I have to use it, the next month to buy a car or to pay my kids' tuition. You want the principal to be stable. And so we asked ourselves, if those are the requirements, and obviously you want a high return, 350 basis points, nice, but what if we can give 10%, right? Then we got an interesting product. And this is just sort of a fascinating sort of way of building structured products backed by Bitcoin in the capital markets, John. This is never done before, right? Like in equity, hybrid equity, right? Like it's treated like equity, trades with a 4-letter ticker. And what you're hoping to get out of it, what a buyer is hoping to get out of it, is that the principal stays stable. Now, can we get it to trade in a tight range right around $100, right? And still pay a large floating dividend, right? We started at 9%, we increased it to 10%, now we've increased to 10.25%, and now it's 10.5%. And those who have studied Stretch have seen in the last 2 weeks, it finally seasoned and trade in a very tight range of $100, right? And even the last few days, plus or minus 5 cents, right? And with significant volume, some days $150 million a day. And this, sometimes you have to take steps to get to where you are, right? The big steps were Bitcoin treasury company, levered Bitcoin, company that issues debt in the form of convertibles, to a Bitcoin credit company that's offering preferreds. Those are the big steps. And the small steps before that were, a perpetual convertible preferred strike, a perpetual preferred that is, investment grade in nature or trying to be investment grade Strife, a perpetual preferred that's junior to all the others and maybe junk, rated, and that's Stride. And now Stretch is sort of that, and Michael calls it our iPhone moment. And we see this thing now trading with a vol that could eventually go down to 1, right? It's trading in this tight window, and also $150 million a day in days. And it's just fascinating. Even if you don't like Bitcoin, if you just want to study the history of the capital markets and innovation in the capital markets, I think Stretch is going to be seen 10, 15, 20 years from now as one of the most, important inventions in the public securities market in the US. And then obviously now most recently last week we launched Stream, which is a preferred in Europe, which we wanted to give people euro exposure. And because of the size and scale and capability of our company, we're able to sort of get through the European regulatory challenges, which there are many, and start to offer the market, open up the market over there. And why do Europeans want these products? Because they, we here want to get 350 basis points on our money market. Over there, they're getting 150 basis points, right? And so they're yield starved even more so than we are.
Did you know you can earn Bitcoin without ever buying it? That's where the Gemini credit card comes in. Here's how it works. Percent Bitcoin bonus. Those wild ride can match.
Background there. And I think that your preferreds were, I could be wrong on this, but I think your preferreds were the first ones ever listed on Robinhood, which was a huge unlock. And this is the first time a lot of retail investors, certainly, have really been engaging with these kinds of financial products. So it's been really interesting to see the way that you found product market fit, but also brought in a whole new segment of the market to something that they weren't either interested in or having access to before. So I'm interested to see how that continues to develop and what products do come out of that. But going back to MSTR, there's this huge capital stack you guys now have of different financial products. But MSTR's performance, their annualized returns on MSTR has been about 80%, which is much more than Bitcoin. However, in 2025, MSTR has started to lag and underperform Bitcoin's price throughout most of 2025. This has raised a lot of questions from different investors about this. And I wanted to get your thoughts on this. Obviously, not everybody can afford to get spot Bitcoin, but some people are saying like, hey, just spot Bitcoin is better and the right investment choice. How much of a concern is MSTR's price performance relative to Bitcoin to you as CEO? Is this something that you think is a vital KPI? Is it somewhat unimportant? How do you think about that? How important is that to you all?
Yeah, so just on your last comment about Robinhood, I think what Bitcoin has done for folks in general, and there's a lot of discussions around it increases somebody's time preference, right? You're willing to save your money and you're willing to invest for the long term. And I remember when I was in my early 20s, my time preference was short as possible. I made money. I went and got a lease for a BMW, and I went out to parties at night, and open up tabs and all this kind of stuff, right? Because at that point in time, the investment options for something that provides 40-50% returns or 80% with Bitcoin didn't exist. I think the reason it was important for these prefers to be on Robinhood is you have long duration products, right? Like MSTR, like Bitcoin, that give you high returns and that fits a need. But you also have these short duration products like STRC that before, if your option was to get 2% or 3% or nothing, you would just go spend the money. Now people in Robinhood, right, like me when I was 25, right, like said, well, I could either go out and go to a bar, or I can put my short-term money into something that gives me 10.5%. It lengthens your time preference, and so I think it's actually quite good for folks who are Robinhood, but it's quite good for society for there to be these different options backed by Bitcoin. The topic of MNAV comes up a lot with us, right? And I've seen it all, right? When we first launched in August of 2020, our MNAV went up, past 3 to 4 and beyond. Like you saw that happen with other Bitcoin treasury companies like Metaplanet. And in 2022, with Bitcoin winter, our MNAV dropped. I think it went down to as low as 0.75, right? And so we're trading below the value of the Bitcoin on our balance sheet, even as the price dropped. And then, it steadily started to march up again in 2024, especially with the approval of Bitcoin ETPs. With the elections last November, it went up again to 2, close to 3. And now we see it starting to compress again for a variety of reasons back to, 1.2, 1.3. And what I'll state is there are fundamentals and there are psychological reasons for MNAV. Our time horizon, right? Talking about, sort of time preference, right? Because we're Bitcoin invested, our time preference is long, right? It's high. And our being myself, Michael, our board members, our executives, and therefore the company, right? And so, we started as a software company that had to generate incomes and revenue and report them to the street every 3 months and be scrutinized whether our revenue went up 5% or 6%, and whether our operating margins were 15% or 16%. We were being measured every quarter by the street. And as a result, what we delivered in terms of results will cause our stock to fluctuate. Not a lot, right? And the volumes on our stock are much less than what they are now, and the people interested. But the nature of running a software business or any other public company that's capitalized on the US dollar causes those companies' time preferences to decrease. And you worry literally every quarter, right? Like you're built your company all around a 90 day timeline. And that's not good. I don't think that's good. And there's a lot of conversations around sort of the public markets being in a quarterly cycle, right? I know there's conversation about the SEC around should it be 6-month cycles, right? With Bitcoin.
Senator Cynthia Lummis recently announced that funding for a U.S. strategic Bitcoin reserve can start anytime. This is a massive step forward for a strategic crypto stockpile, and no surprise, was soon followed by a new all-time high for Bitcoin. If you're looking to buy more Bitcoin, BitIRA can help. In fact, BitIRA will help you convert an existing IRA or 401k into Bitcoin. This also allows you to buy Bitcoin using pre-tax funds, then continue to invest in it over time as you do any other retirement account. And if you want, you can even add XRP, Ethereum, or other cryptos. BitIRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and is registered with the US government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Think about this. In March, President Trump signed an executive order for the Treasury to manage 200,000 Bitcoin as the foundation for a reserve. That's just the foundation. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin. Fire Nation, when you want more for your business, more privacy, more guidance, more success, it all starts with Northwest Registered Agents. These legends have been helping entrepreneurs launch and grow their businesses for nearly 30 years. They're the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your state's laws and actually care about helping you win. With Northwest, you can build your complete business identity, everything from what your customers see to what they don't, operating agreements, meeting minutes, compliance paperwork, and more. You'll get thousands of free resources, lawyer drafted forms, and step-by-step guides all in one place, and you don't even need to create an account to access them. Best part, privacy is automatic. Northwest never sells your data and handles everything in-house. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free.
The cycle becomes 4 years, 5 years. Not only has the time preference of somebody who's owned Bitcoin increased, the time preference of the companies that hold Bitcoin have increased. And that's what's happened to us. I fully understand it's frustrating if you're a short-term investor, if you're a day trader. Like I bought MSTR, the MNAV was 2, now it's down to 1.3. Holy crap, what happened? They keep buying Bitcoin, but their valuation goes down. What's fundamentally wrong with the company? What I would say is the opposite. We're long time preference. And if you look at the fundamentals of the company today, what have we done? We went from a company that holds Bitcoin on our balance sheet to a levered Bitcoin company that primarily invested through convertible bonds, which are illiquid, medium duration, high risk instruments to the shareholder and to us, to now being a company that's capitalized on Bitcoin and has created a Bitcoin digital credit market. We've IPO'd 5 new securities. Nobody does that. The fourth one, Stretch, was the largest IPO this year, $2.5 billion. It is potentially the most innovative product in the capital markets. And I sit back and I say to myself, we've had a pretty good year. Like, we've fully transitioned the company into preferreds. We've created brand new products. We launched in Europe, right? Europe is not a Bitcoin friendly market. We launched a product in Europe. We've done all these things. We've innovated. We've converted our capital structure. We found a product that pays 10.5% dividend yield, tax deferred. The tax equivalent yield on that 17%, right? So with that long time preference, I say to ourselves, we've done all the right things. We've innovated. Our MNAV should be higher. And I do think it'll go back higher again as the market absorbs what we've done. And then the sentiment of the market as Bitcoin starts to go back up again, it'll get stronger. So the long time preference and long time horizon is important for us. And I get some of our investors don't have that, and it can be frustrating. But I feel like what we've done is we built the basis of the company for strength going forward.
Right. And for a long-term success as opposed to minute-to-minute type of success. That's a helpful way of framing that. And I think that's really a useful perspective on how to think about that there. I wanted to ask another question around this. Strategy has raised nearly $20 billion of capital thus far in 2025, which shows not only huge market demand, but it has raised questions among investors about dilution from these ATM issuances. How are you thinking about this? How do you tell people to think about this in terms of protecting their shareholder value versus raising capital to increase these purchases? What's that dynamic like for you? What's the story you tell around that?
We constantly look at a few important KPIs, right? One is BTC yield, right? And that's the percent increase in Bitcoin per share, right? And so a fairly simple way to think about dilution is, as a shareholder, if you get, as an example, 100,000 Satoshi per share, does that number go up or does that number go down? And that per share, that denominator basis, takes out the dilution effect and says, are we increasing Bitcoin per share? And I think that's a very clarifying KPI, because it tells people, is it good or is it bad dilution? If it's good dilution, the Bitcoin per share goes up. If it's bad, it goes down. As an example, issuing equity above 1x MNAV increases Bitcoin per share. Issuing equity below 1x MNAV decreases Bitcoin per share. So that's one sort of guideline we look at. But beyond equity, right, issuing a preferred, right, is even better, because there's zero dilution up front. And the dilution occurs over time as we pay off the interest. Or pay the dividends over time. But if it's 10%, then the dilution effect is much less than issuing equity at even 2x MNAV. And that's why we like the preferred so much, because the upfront dilution effect to the shareholder is zero, and it only occurs when we issue equity to pay off. We can do that in the preferred market because of our scale, because of our work with bankers and with attorneys and regulators to be able to enter into that market. And that's why we like it so much. And so if I'm a shareholder and I think about this, right, you just can't think about the number of shares outstanding. You can't just think about the ATM as fully dilutionary. It's, are we adding or are we removing Bitcoin per share? And all the actions we have taken to date are increasing Bitcoin per share. And at our scale, right, at the size of company we are now, with over 460,000 Bitcoin, it gets harder to increase Bitcoin per share. But we have access to capital markets and access to partners that many others don't.
Right. So it's a question of how are you denominating your portfolio? And if you're denominating in Bitcoin, then you actually prefer this. So that makes a lot of sense, that framing there. I wanted to ask a question around this. Strategy's Bitcoin purchases have slowed and gotten smaller recently. And I was curious what you attribute this change to. Is this a drop in demand in the market? Is it a risk management practice that Strategy's engaged in? And what is Strategy's strategy for accumulation during periods like this where spot Bitcoin price is sort of lagging or chopping, and just how you think about that from a risk management perspective.
Yeah, it sort of goes back to the three phases that the company has gone through as a Bitcoin treasury company. Right, phase one was just buying and holding Bitcoin, which looks a lot like a spot Bitcoin ETF. Right, just acquiring Bitcoin. Stage two was levering up the company through convertible notes to be able to provide intelligent leverage and increase Bitcoin per share. And stage three is using preferreds to provide intelligent amplification and provide Bitcoin backed credit. We just started stage three in January of this year. And I get it. Bitcoin investors are an impatient bunch. I am too, right? And people are like, well, what the heck? Like, what's going on? And they forget that we've raised, $7 billion in the preferred market. But really, for that to mature, we want to raise $10 billion, $20 billion, $30 billion in the preferred market. And as we do that, we'll start to accelerate again our Bitcoin purchases. But we've had to mature and season the market, right? When we launched Stretch, I figured it would take about 2 weeks for it to price up to $100, and it took about 4 months. It's not that long, right, in the grand scheme of things, but we had to see the market season, and now we're issuing equity off of the Stretch ATM, as you saw last week, and are able to start to accumulate capital faster and buy Bitcoin faster. But it's this transition from intelligent leverage to intelligent amplification that took us time, expectedly so, right? And so this is going to take a little time for the market to mature, right? Like the first iPhone launch didn't even have 3G high speed internet access, right? Like it didn't have an app store, right? And it did pretty well over time, right? I think our preferreds will do well over time.
Yeah. So I think that that's a really interesting point about how much. I mean, the name strategy, right? It's changed from MicroStrategy to strategy. The business model of the Bitcoin treasury aspect of the business has evolved, and the market does have to sort of like relearn these things as you guys are changing and evolving the offerings here. So to that point, I wanted to get your thoughts around this like piece around education. Strategy, and Saylor specifically, has been one of the biggest ambassadors for Bitcoin and for Bitcoin education. Hope.com, for example, is a Saylor-backed educational resource on Bitcoin itself. How much do you all focus on educating the public about Bitcoin versus just educating them on these Bitcoin-backed securities and the products you are offering? Because, like you're saying, there's an enormous amount of a learning curve to go up here to get to a place of understanding these things deeply. And how do you go about doing that? Do you see that as being your job, or is it your job to teach people about Bitcoin, or just teach them about like Stretch and MSTR? Like, walk us through how you think about like the educational piece of this and how you go about tackling that.
Yeah, I think there's a layer of educating people about what a Bitcoin treasury company is, what our strategy as a Bitcoin treasury company is, the evolution that we've gone through, which is why we get on these shows and talk about this, and why our preferreds are such innovative products. And that's what you see, Michael, myself, our IR team, do a lot. We now have channel distribution, right? Meaning we can work with the Robinhoods, or we can work with the Fidelities or the Morgan Stanleys and these folks to also educate people on our securities and on our strategy. And that's all good. That's all well and done. I think what gets really interesting is educating the masses on the topic of Bitcoin. And everybody has done a great job in the Bitcoin community. You've done a great job, John, with that. But there's still a layer of 90% of individuals in the US and the world who either listen to short sound bites and take that as reality, right? Bitcoin is for criminals, or listen to professors in colleges who talk about Keynesian economics, and it's good for governments to print money, and they take that for granted. Or people who look to government authorities, right, and state that their whatever currency, their sovereign currency, is where you should put all your money, right, and they take that for granted. And I'm passionate about educating across all of those levels, right, and that's beyond strategy. but it's really creating. We hire now folks from business schools and from great U.S. institutions, and they all tell me, right? CJ and Ellen and some folks on our team tell me, like when I talk about Bitcoin, people think I'm crazy, right? Like when I talk about Bitcoin, there's no one else to talking on the other side, and we have to fix it at that level, because higher education and grade school education, they're rooted, deep rooted in the current way of teaching technology, teaching the financial markets, teaching corporate finance, and teaching monetary policy. And I would love to see us, we'll take more of a role. I'll take more of a role in fixing things at that level too. I want it to be pervasive.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets.
I know we're coming up on time here, so I want to try to sneak in a couple more quick questions here. But one thing you mentioned was time preference, and in Bitcoin, you say like 4 years is sort of like short-term holding period. There's been a lot of talk about this lengthening cycle theory, and I just wanted to kind of get your thoughts on that. Do you have a view on that? Have we topped and this 4-year cycle is over, or do you think that there's credence to this idea that these cycles are going to extend, because now we have players like Strategy that are holding 3% of the supply and never going to sell? Does those cycles no longer apply? Like, what is your thinking on that? And like, does that matter to you all, or is that sort of like indifferent to your long-term strategy here?
One, I don't think it matters, right? Like, I think Bitcoin price does what it does, right? Like, people want to say, well, what's your projection for next year? I don't know, right? Like, it's playing the markets. We're not short-term traders. We're long-term inventors and investors of capital. Right. And there are folks who sit at trading desks with 4 screens and are going short Bitcoin, long strategy or the other trade, and let them do that. Right. Like that's okay. But it is hard to know what Bitcoin price is going to do tomorrow, a month from now, 90 days from now, a year from now. What I do know is as more institutional, more corporate capital gets infused into the asset class, you'll see volatility go down. And perhaps the 4-year cycles associated with the halvings starts to change. And it's not so much halving related, but it's related to other macroeconomic or investment cycles. So I do think the 4-year cycle becomes less important. I do think the volatility of Bitcoin goes down. And although those might be less attractive for people who are trying to get the short-term gains, right? Like they want the 80% pop in a year. It is attractive to people who want to invest in an asset class that has lower volatility, lower ARR. That's why we put our preferreds out there. We realize that there's a much larger addressable market at lower ARR, lower volatility. And so if Bitcoin lowers its ARR and volatility, it's still going to outperform the S&P 500. It's still going to outperform private credit markets. So it's still going to be better than whatever it is, 15% ARR, 15% vol of the S&P 500. It might not be 50-50. But I think that's okay, because as the cycles lengthen, I do think more and more institutional, corporate, high net worth money will come into the market.
One final question here, and I'll let you go, I promise. But we've talked about a lot of these Bitcoin-backed securities. There's new products coming out from Strategy all the time. What are some of the most exciting opportunities that are ahead? I won't ask you for a price prediction, because Saylor's already said $13 million a coin, so we know what that is. But what are some of the opportunities ahead in 2026 that you're most excited about and that you're most focused on as the world's leading Bitcoin treasury company?
Yeah, so one, seasoning our preferreds. Right. And really by seasoning, I mean getting more and more of the market to understand the offering. Right. It's a product that I said earlier has a market. Everyone is going to become more aware of it. We'll have more capital infused. Hopefully we'll see more daily liquidity. And so that's piece one. right? Making these preferreds work. It's a new product. People are just learning about it. Everyone that learns about it likes it. Two, opening up more pools of capital of the preferreds. How do we do that? One dimension is for investment grade investors to be able to access it, high yield investors, those who require a credit score. So by getting an S&P credit score, we've opened up that market to different pools of investors, and also opening up more broadly across the world. Right, so that's why we introduce a euro base. Maybe we'll do a CAD base. Maybe we'll do something, JPY base. So that's sort of one, in opening up the concentric circles on these preferreds, and I think there's a big opportunity there. I think the other big opportunity that we've talked about in the past is seeing the traditional financial system embrace Bitcoin. Right, what form is that? Right now, they're underwriting Bitcoin-backed securities. Some of them are soliciting Bitcoin-backed securities to their wealth management channel. The next is for them to open up custody services, exchange services. And when they're holding and custodying the Bitcoin, that changes the game, because then they can let somebody take a loan against their Bitcoin, get yield on their Bitcoin. That opens up the market too. And when that market opens up, you also open up the pools of capital that can invest in Bitcoin, grows the overall demand, right? Grows the market, and because the supply is limited, will cause the price of Bitcoin to increase. And what's exciting about this is the things I mentioned 2 years ago were, one, never thought of, the Bitcoin-backed preferreds, and two, not really considered something that was going to happen on the horizon. TradFi supporting Bitcoin, and now the product's been invented, and it's an inevitability of when TradFi is going to embrace Bitcoin. I think these are two major interesting catalysts: the seasoning of our preferreds and the preferred market, and the embrace of TradFi of Bitcoin. That if you look at 2026, it's very promising for strategy and for the asset class.
What's the second best? There is no second best.